Good morning, dear listeners, and welcome back to Capital Markets Quickie. I'm your host, Endrit Cela, here to unpack a tumultuous day on Wall Street, where stocks took a notable dive, erasing early gains to close sharply lower. Yesterday, the Standard & Poor's 500 fell by 1.2%, dipping below the 5,100 mark, marking its steepest two-day drop in over a year. The Dow Jones Industrial Average wasn't spared, shedding 0.7%, while the tech-heavy Nasdaq Composite led the losses, down by 1.8%. It's clear that big tech wasn't immune to the market's jitters. Investors are juggling a number of issues, from the ongoing corporate earnings season, which hasn't quite sparked enthusiasm, to rising bond yields, which have investors rethinking the potential scope of interest rate cuts from the Fed this year. The 10-year Treasury yield hit new highs for 2024, hovering around 4.63%. Adding to the unease were the geopolitical tensions stemming from Iran's recent attack on Israel. Although initial fears of escalating conflict seem to ease, the situation remains fluid and has kept the markets on edge. Despite these concerns, oil prices managed to claw back some of their earlier losses. West Texas Intermediate crude settled above $85 per barrel, and Brent crude closed just over $90, as the world watches closely for Israel's next move. On the corporate front, there was a glimmer of optimism as Goldman Sachs saw its shares jump over 3% after reporting a profit surge that topped estimates. However, not all news was good, as Tesla's shares tumbled over 5% following news of staff reductions amid a slowdown in EV growth. So, what's next? Investors will be closely watching for any further developments in the Middle East and parsing through more earnings reports to gauge the health of the broader economy. With high stakes and high tension, it's a critical moment for the markets. That's all for today's episode of Capital Markets Quickie. Thanks for tuning in, and be sure to join us tomorrow as we continue to navigate these choppy market waters. Stay informed, stay agile, and most importantly, stay calm. Until next time, cheerio.